37.6 million ounces of silver vanished. Not slowly, not quietly, not in months or years, but in just 47 days. This wasn't a glitch. This wasn't a clerical mistake. This was a silent exodus on, invisible hand sweeping precious metal out of the vaults while the public slept, while governments watched, and while financial elites pretended nothing was happening. But the truth is far darker. That missing silver is not an isolated event. It's a signal, a warning, a crack in the global financial system that has been expanding for decades. And if you don't understand this now, when the final moment comes, you won't even have time to react. So tighten your seatbelt, because today, on History of Finance, we are going to expose a story hidden behind locked vaults, whispered inside elite boardrooms, and buried deep under economic data the world was never meant to read. And once you hear this, you will never look at silver or the global economy the same way again. So like, comment, and subscribe. Because what you're about to learn is something no one else will dare tell you. It begins with a question no one asked. Where did the metal actually go? Silver isn't like digital money that can be created with a keystroke. It is physical, heavy, countable. So when 37.6 million ounces disappear, someone has to physically take them. Someone has to move them. Someone has to arrange trucks, guards, authorizations, transport documents, logistics all under the radar. That kind of operation isn't done by some random collector. It needs power. It needs influence. It needs someone with the ability to move in the shadows without triggering alarms. But to understand how this disappearance became possible, we must go back decades to a global system built on illusions. For years, silver has secretly been the backbone of modern industry. Phones, solar panels, electric vehicles, medical devices, defense systems, every one of them depends on silver's unique conductive properties. You can replace gold, you can even replace copper, but you can't replace silver, and that's where the danger begins. Because while the world was busy chasing digital assets, currencies, and technology, something else was happening silently. Global silver stockpiles were falling. Year after year. A little, a leader. Nothing dramatic enough to cause panic, but the decline was real, measurable, and accelerating. Yet governments did nothing. Corporations said nothing. The media ignored it. Why? Because a shortage in silver doesn't just threaten industry. It threatens the entire monetary structure that has been weakening since the 1970s. Behind the scenes, financial institutions began issuing more paper silver than real silver. For every ounce in a vault, there were dozens of claims on it. Investors thought they owned silver. In reality, they owned an IOUN empty promise, backed by a metal the system didn't have in physical form. And as long as nobody demanded delivery, the illusion remained intact. But illusions don't last forever. All it takes is one spark to ignite the truth. And in late 2025, that spark arrived. Something strange started happening inside the vaults of one of the world's most important metal repositories. Withdrawals. Not small ones. Not normal ones, but massive, coordinated back-to-back withdrawals. On a scale never seen before. In 47 days, 37.6 million ounces were removed. And here is the part that keeps analysts awake at night. These weren't retail investors. These were institutional-level withdrawals. When institutions take physical silver rather than paper claims, it signals one thing: distrust. They didn't trust the system anymore. They wanted metal, not promises. But who were they? And what triggered the sudden panic? Some say it was a government quietly preparing for a monetary restructuring. Others believe a group of megacorporations involved in solar and AI technologies began hoarding silver before announcing a new superconductor technology. But there is a third theory far more terrifying. A single sovereign wealth fund, backed by oil money and geopolitical ambition, began moving aggressively in the silver market. If this theory is true, then what happened in those 47 days wasn't just a withdrawal. It was a strategic capture of one of the world's most important industrial metals. To understand why this matters, Imagine a future where one nation controls the majority of global silver reserves. Solar energy, controlled. Electronics, controlled. AI hardware, controlled. Defense, technology, controlled. Controlled. Every country that relies on modern technology would become dependent on the silver-rich nation. This isn't just economics. This is geopolitical power. Meanwhile, the average investor remained clueless. They were watching stock tickers, crypto charts, and inflation reports, completely unaware that the real earthquake was happening beneath their feet. And when the first analysts noticed the vault numbers dropping, it was already too late. The metal was gone, vanished, and the vaults were left echoing with emptiness. But this story goes deeper, because the disappearance didn't happen in a vacuum. Silver production has been falling for years. Mines are struggling. Grades are declining. Costs are rising. And demand is exploding. Solar panels alone consume hundreds of millions of ounces. EVs need more silver than ever before. AI server farms are sucking up every conductive material available. The world is entering a new age, powered by electricity, data, and technology, and silver is the lifeblood of that transformation. But the supply is running out. Now, imagine a system built on the assumption that silver is abundant, suddenly realizing the cupboard is empty. Industries would halt, prices would skyrocket, governments would panic, and financial institutions holding billions in paper silver contracts would face a nightmare scenario. What happens when thousands of contract holders demand metal that doesn't exist? This is why those 47 days matter. It wasn't the event, it was the signal. A signal that the people who know what's coming have already started preparing. They aren't buying silver. They're taking it, removing it, locking it away. They know the illusion is ending. But here is where the story takes a darker turn. Because shortly after the withdrawals, something unusual happened. Reports began circulating that several large industrial buyers were quietly informing suppliers of potential shortages. Delivery times started increasing. Premiums began rising, but the public still didn't notice. The media still said nothing, and financial analysts continued pretending everything was normal. But insiders were whispering, "The shortage is real. It's already here." Then came the silence. Governments stopped commenting on reserves. Certain vaults stopped publishing daily withdrawal data. Suddenly, transparency vanished. And when transparency disappears in finance, it's never accidental. People think crises begin with explosions. They don't. They begin with silence, with numbers disappearing, with data being altered, with institutions refusing to answer simple questions, and that's exactly what started happening after the 37.6 million ounces vanished. Some say the withdrawals were part of a quiet bailout. Others believe a major institution was on the brink of collapse and needed physical metal to cover obligations. But there is another possibility, one far more alarming. This was the beginning of a global scramble, the first move in a secret race to secure the last remaining silver before the world wakes up. And if that's true, then the real crisis hasn't started yet. Because once corporations start hoarding silver, governments will follow. Once governments start hoarding, industries will panic. And once industries panic, the price will go vertical, not because of speculation, but because of survival. Now you understand why those 47 days matter, why the disappearance wasn't random, why the silence afterward feels intentional, and why the next phase will be far more dramatic. Because silver isn't just a metal. It's the backbone of modern civilization, and when the backbone weakens, everything above it collapses. So the question is not what happened in those 47 days. The question is what happens next. Will governments reveal the truth? Will industries admit shortages? Or will the next disappearance be even bigger, even faster, even more shocking? Whatever happens, one thing is certain. The world is running out of time, and those who understand this now will be the only ones prepared when the financial illusion finally breaks. This is History of Finance. Like, comment, and subscribe, because the next chapter of this story is coming, and you'll want to be here when it drops. But before we talk about what happens next, we need to step back and look at something most people never notice: the timing. Why did this disappearance happen now? Why not 5 years ago? Why not 10 years later? Why exactly during a period when global currencies are weakening, inflation is and central banks are secretly increasing their gold reserves at the fastest pace in modern history? The answer is simple. Because every financial empire collapses in the same pattern. First, confidence drops. Then, liquidity tightens. Then, institutions begin hoarding real assets. And when that happens, paper markets begin to crack. Right now, silver is where gold was in the 1960s: ignored, underestimated, misunderstood. Before the US closed the gold window in 1971, insiders had already started buying physical gold quietly. The public had no idea what was coming. And when Nixon slammed the door shut, gold exploded overnight. The same signs are here today, but now they're flashing around silver. See, gold is a monetary metal, but silver has a double identity: monetary and industrial. And when something is both money and a critical resource, its scarcity becomes far more dangerous. If gold disappears, you lose wealth. If silver disappears, you lose industries. That's why the most powerful corporations in the world, tech giants, energy giants, AI giants, are silently watching the silver supply like hawks. They know their future depends on it. They know every breakthrough they promise: clean energy, faster computing, smarter AI, quantum hardware, all of it crashes without silver. And that's why when 37.6 million ounces vanished, the silence wasn't confusion. It was fear. Because the moment one corporation or nation begins hoarding, others must follow. Nobody wants to be last. Nobody wants to be the one left buying at 10 times the price. So a chain reaction begins. A whisper turns into a sprint. A sprint turns into a stampede. And in every financial stampede, the public realizes the truth only after the doors have already closed. But something even more interesting happened after the disappearance. Analysts noticed unusual purchasing behavior in futures markets. Someone unknown mega buyer began taking delivery of physical silver instead of rolling contracts. Institutions never take delivery unless they expect shortages. When they take delivery aggressively, each man stay re-preparing for a crisis. And when they refuse to disclose who they are, it means the crisis has already started behind closed doors. Some insiders believe the withdrawals point toward a new kind of global conflict, not fought with missiles, not fought with armies, but with resources. A resource war where nations fight to conquer land, fight to control elements essential for technology. Lithium, cobalt, rare earths, and silver, the king of conductivity. In this new silent war, whoever controls silver controls the technological future. And right now, one player is moving faster than any other. But here's the unsettling part. You won't hear governments admit it. You won't hear institutions confess it. They will deny shortages until the very last second. Because the moment the public realizes silver is disappearing, the entire market structure collapses. Prices explode beyond control. Industries panic. Investors run to physical silver like a lifeboat. And once that happens, paper contracts become worthless. $1 trillion shadow market evaporates overnight. That's why the world was told nothing about those 47 days. Not a warning. Not an explanation. Not even a fabricated excuse. Silence. Because silence protects the institutions. Silence keeps prices stable. Silence keeps the public calm. Silence gives the elites time to prepare while everyone else sleeps. But silence doesn't last forever. Because cracks are already forming. Look closely and you'll see manufacturers quietly raising prices. Delivery delays becoming normal. Mining companies admitting ore quality is declining. Governments accelerating green energy targets without securing the silver needed to achieve them. The world is heading full speed toward a future powered by electricity, but has secured the metal required to conduct that electricity. And when demand collides with scarcity, the effect won't be gradual. It'll be explosive. Imagine you wake up one morning and headlines read, "Global silver shortage confirmed." Imagine industrial giants bidding against each other for the last remaining ounces. Imagine nations scrambling to secure supply for military technology. Imagine the price tripling in a week, then doubling again in a month, then becoming completely unavailable at any cost. That scenario isn't fantasy. It's simple math. Demand is rising. Supply is shrinking. Reserves are falling. And 37.6 million ounces vanished into the hands of someone who clearly knows what's coming. But here is the twist. The real shortage won't start when vaults are empty. It will start when people realize they're empty. Markets don't move on. Reality, they move on. Perception. The day the world perceives silver as scarce is the day the true mania begins. And that moment may be closer than you think. Because the missing metal was not spread across many vaults. It came from a concentrated source, one of the largest in the world. When a small vault empties, nobody cares. When a megavault loses this much in 47 days, it's a message, a warning shot, the final quiet moment before the storm. Inside boardrooms of multinational corporations, strategic meetings are already focusing on supply chain risks. Silver is now on the same list as oil, semiconductors, and strategic minerals. Some companies are even considering vertical integration, buying stakes in mines directly. Why would a tech company want a silver mine? Because they know the shortage is coming, and they know the public won't realize until it's far too late. Meanwhile, central banks are doing something unusual. They aren't buying silver yet, but they're increasing gold holdings at a pace not seen in half a century. And historically, when gold accumulation peaks, silver follows shortly after. Because gold protects wealth, silver protects systems. When systems are at risk, silver becomes priceless. Here's a thought nobody wants to consider. What if the disappearance wasn't a withdrawal, but a test? What if someone was measuring how fast silver could be removed without triggering panic? What if someone wanted to understand how fragile the reporting system is, how easily data can be suppressed, how quickly institutions react? If this was a test, then the next removal won't be 37.6 million ounces. It will be double or triple, maybe more. And by the time the public notices, the vaults will already be empty. But there is another question, one even more important. What happens when industries begin failing because of silver shortages? Smartphones, slow production, solar manufacturers shut down lines. EV companies delay new models. AI data centers struggle to expand. Suddenly, the world's technological future hits a wall. Governments panic. Emergency policies are introduced. Strategic reserves are discussed. And the price of silver becomes not an investment, but a survival asset. This is why the smartest investors don't look at charts. They look at patterns, and the pattern here is unmistakable. Rising demand, falling supply, increasing secrecy, disappearing metal, and the first signs of institutional hoarding. All the ingredients for a historic crisis are already in the pot. The heat is rising, and soon it will boil over. But if you're watching this, you are already steps ahead of the world. Most people won't know until the headlines hit, until industries start complaining, until prices suddenly jump.